Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, this time on a Monday morning, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, TheKouk.com, and on Twitter using the handle thekouk. Now, Stephen, hello, firstly.
Good morning, Sean.
I was speaking to someone last week, and they're a fan of the show, and they said, look, I've got to say, I don't really listen to that many interviews, but I listen to the Kouk every Monday morning.
Ooh.
And he was the CEO of an ad agency.
Right.
And he said, I just like listening to Stephen. And in fact, he didn't call you Stephen, he called you the Kouk. I like listening to the Kouk
Yes.
to see what's going to happen. I thought that was a great compliment to you.
Well, I'm absolutely flattered, and the check's in the mail.
Excellent. We'll jump to it because this is a massive week. We might start overseas, though, simply because this has been going on for a few weeks now. And theoretically, we should be getting to some sort of answer on the US debt ceiling issue. Can you just explain it to us?
Yeah, in very brief terms, whenever the US is running a budget deficit, and of course it's running some very, very chunky ones over there and will continue to do so for many years, it's adding to government debt. Now, in the US, there's got to be congressional approval every time a debt ceiling is reached and then exceeded by accumulating debt. And we're in that position right now where the administration's trying to increase its debt ceiling so that it can borrow money simply. You know, the government has to go to the bond market through its Department of Treasury, issuing Treasury bonds, which are government borrowings. And of course, that adds to debt. So unless the legislation gets through the Congress, it won't be able to borrow that money to fund public services, all these things that the government spends money on. So hence the impasse, hence the market nervousness surrounding the whole issue. It pops up every couple of years, but here we are again.
Fair enough. Okay, let's talk about what's happening this week. Where do we start? Let's start with the monthly CPI because, you know, in trend terms, that's interesting.
It is. Look, it's a huge week. It's one of those weeks that the end of each calendar month, beginning of each calendar month, which of course is exactly where we are today, there's a lot of data coming out. The monthly CPI, that initiative of the Bureau of Statistics, is wonderful. It's the month of April that we get the inflation data for. It's not a complete set like the quarterly inflation numbers, but what we're seeing in the monthly series is that inflation peaked in the year to December 2022, around about 8.4% on the monthly reading. It's dropped to 6.3% in March, so still high, but at least we've clipped a couple of percentage points off that inflation rate. What the market's hoping, and I'm sure the RBA is hoping squared, is that we get that number heading towards 6, even a little touch below 6%, just to confirm that momentum in inflation is falling. That is a critical indicator. It's one that's sort of dominating global markets, inflation around the world. In Australia, it's no different.
Okay. So that's this week. What else have we got that you're thinking about here?
Yeah, well, the other one is, of course, the RBA governors appearing before the Senate Estimates Committee on a range of matters, probably some of it relating to the, what do we call it, the administration of the RBA, because it's not just monetary policy that the RBA is responsible for. So they're going to be grilled. It's going to be the governor who's appearing before the Senate. I'm sure there's going to be a lot of curly questions about, you know, financial pain of householders. Has he overhiked? These sorts of things. And unfortunately for a lot of these sort of Senate and House of Reps things, there's a strong political bias rather than an economic bias. But nonetheless, it's a great chance to quiz the governor and sort of see what his take on the economy is right now. And it comes after the inflation number comes out. So might just be a few little more insights into what the RBA and the RBA governor are thinking.
And there's lots around the housing market generally. So we'll have the house price data from CoreLogic. We've got house lend or building approval figures. Is it housing finance this week? I'm not sure.
Yes. No, you've summarised it well. There's a ton of housing data. And of course, who doesn't love housing data in Australia? We live for it, don't we?
We do.
The CoreLogic house price numbers, we know from their high frequency data for the 5 cities that we're going to be seeing a monthly increase, probably up around about 1.2% for the month. It's an extraordinary rebound.
The Reserve Bank must be worried about it. I mean, we don't necessarily want that. I mean, good for us homeowners, but not necessarily for the economy.
Well, that's the $64 question. Yes, there's this issue that the RBA doesn't tackle house prices. Of course it doesn't, but it looks at the wealth effect and the confidence effect from changes in house prices. And I dare say it was quite content when house prices were drifting lower. You know, they'd had that incredible spike during the COVID lockdowns, and a bit of a pullback was healthy, was good, was appropriate. But now, and this is a discussion that's getting a lot of media coverage, the immigration intake that's, well, partly designed to address the labour skill shortage, but of course the consequence and the sort of cliched comment is, where are all these people going to live? And that's showing up not only in house prices, which are going up again, but the rental market, which is as tight as a drum, that there's sort of very low rental vacancy rates around most capital cities, and rents are booming. They're increasing by double-digit rates, which sort of just compounds this whole housing issue. And alas, when we also get the building approvals later this week, we're going to be seeing probably a really sluggish level of new construction. So while we know demand is increasing, that's a given. Immigration's sort of baked into the cake. The supply of new dwellings is going to be pretty moderate over the next year because building approvals are so poor. We're hearing building construction companies going to the wall because of high cost pressures. And, you know, the dynamics on housing, like many other markets, supply and demand says to me that prices are going to be skewed up, not down over the next year or two.
A big chunk of growth is housing, but another big chunk is investment. And we get CapEx figures. We've also got credit data this week.
Oh, indeed, and I'm a massive fan of the CapEx, the private sector business investment numbers, and that's one reason, in my view, why Australia is not going to have a recession. While we consumers are hunkering down, you know, housing construction is probably going to be pretty weak over the course of 2023. Businesses are still investing, and it's not just mining. It's a more broadly based pickup in CapEx that I think it's a reflection of a lot of projects being postponed and cancelled during the lockdowns, you know, things like machinery and equipment. Well, supply chain problems meant you couldn't actually import a lot of equipment. So now there's a bit of a catch up. So I'm expecting to see a small increase in CapEx in the March quarter, something like a 1% increase. And that puts a bit of a building block under bottom line GDP, even though we know that things like retail sales are going backwards. So interesting to see whether the business sector is still, you know, chugging along, building some warehouses and hotels and these sorts of things. And, of course, investing in IT and machinery and equipment.
Stephen, I reckon you've had a breezy couple of weeks just quietly, but it all changes from today.
Oh, yes. That last week we had a pretty light data week, but gee, this week's going to be a corker. I think there's something just about every day. So watch this space, as they say in the classics.
Have a great week.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.